Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss Ark Invest and two growth companies they have been heavily buying the dip on over the past 2 weeks. Ark Invest has been one of the top asset managers in the financial markets over the past 5 years, grossly outperforming the overall S&P 500. And their flagship ETF, Ark ticker ARKK, is still up 72% over the past year, even after falling close to 40% from its highs. And over the past few weeks, during the recent transition out of the high-flying tech names that carried the market even higher in 2020, we're now seeing rotation out of those high PE, low profitable companies, and Ark Invest, who's primarily focused on disruptive innovation and buying the young names who have a lot of growth potential going forward, has been hit extremely hard. And we can see that Ark's innovation ETF has fallen more than 35% from its 52-week high, and investors are now thinking, what is Ark going to do once all their big companies are on a major pullback? And what we've seen over the past few weeks is that Ark has been transitioning their portfolio, making different changes, and loading up on a few big name companies that they truly believe in over the long term, and both of these brands have fallen over 35% from their 52-week highs as well. So in this episode, we're going to discuss the two companies that Ark Invest has been really buying into as of late, take a look at their recent financial performance and the future growth opportunities of both of these companies over the longer term. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos. And the first stock that Cathy Wood and her team at Ark Invest have been heavily buying the dip on as of late is ticker PLTR, which of course is Palantir. One of the most talked about new young tech companies. This is a big data analytics brand that currently trades for $20 per share. They've been trading on the public markets for less than a year, and they have a market cap at $38.8 billion and trade with a sky-high forward PE of 145. So this was a high-flying tech company that exploded, growing over 100% after it got publicly listed, but from that high point in that 52-week high of over $38, they have seen a major pullback. And if we take a look at the recent performance, from over $38 per share just back in February of 2021, so only over a few months, they have now fallen down over 45%, back down to their current level. And something important to know is the date on which Ark Invest started to buy Palantir. So the high point in the share price was on February 9th, 2021. But if we jump over to Ark's holding, they started heavily buying into the company on February 12th, 2021. So right after it took a major decline and started trending away from its high and started on the downward spiral, that's when Ark started heavily buying the company. And we can see how fast they accelerate their buys right around the $20 to $23 range in share price. Back at early February, they only owned 2.4 million shares of Palantir. But currently, the company now has invested over $500 million into the stock and owns over 27.8 million shares of this big data company. So as it's starting to fall from its highs and on the downtrend, Ark has continuously continued to buy, and over the recent volatility during the past 2 weeks, they've once again accelerated their purchases, adding millions and millions of shares of this big data company. And Palantir has just shared their Q1 2021 earnings, and they had a record-breaking quarter. The company posted year-over-year revenue growth of 49% to $341 million in Q1. And they also saw major expansion in their US revenue, which grew 81% annually once again. So company's total top line, their sales and their service revenue is expanding at a terrific rate, and the company has major forecasts for this growth to continue over the next few years. And what I find really impressive is their adjusted free cash flow came in at a positive $151 million, which is absolutely phenomenal, which is a 44% margin. And the actual dollar figure grew $441 million over Q1 2020. So they completely turned it around and generated positive free cash flow, which is a great sign for a young name. And if we take a look, their margins are also growing as well as they achieve greater scale. Their total gross margin reached 83% in the quarter, which is absolutely phenomenal, and their contribution margin increased to 60% overall. So the company as a whole is improving and going in the right direction. Positive free cash flow, massive revenue expansion, increased in margins, and overall they're learning, they're developing, and becoming a more sustainable long-term business. And taking a look, their government growth was absolutely phenomenal. And if you're unaware, Palantir operates in two main business categories, which are commercial and government. And to see the government revenue grow dramatically by 76% year over year to over $208 million in a quarter, I believe to be very impressive. And I love companies who get revenue generated from government sources, because usually and historically, governments are very sticky customers. Once they find a company they like for a specific reason or a job, they tend to stick with them over the long term, and the government budgets continue to grow as well. So these companies who have long-term deals with governments tend to have growing sustainable revenue streams for long into the future, and I think Palantir entering into that space is doing a phenomenal job. And they also announced throughout the last few weeks that they have major expansions from governments all around the world. Palantir Technologies and the Royal Navy extended their contract, which is fantastic. As well, the US Coast Guard has renewed their partnership with Palantir to help fight the pandemic. So we can see just over the past few weeks, major government organizations are partnering and renewing contracts with Palantir, meaning they're happy with the services the big data company is providing. So I understand why Ark likes the brand right now. The share price continues to fall, you can buy more shares at a cheaper price, but their earnings and their numbers have been absolutely phenomenal. And looking ahead, they believe in the second quarter of 2021, their revenue will grow by 43% year over year. They have an adjusted operating margin about 23%. And something I love to see is that for the full year 2021, their original forecast was a break even in cash flow. But now they believe they're going to post positive free cash flow of $150 million for the entire year, which is a great sign. And over the long term, they believe they can grow their revenue by over 30% for the next 4 years. So every single year for the next 4 years going forward, if their total top line can expand by 30+%, their overall revenue is going to grow exponentially. And to buy the shares of this name for only $20 at the current level, Ark Invest may be onto something. So this was the first brand that they've been heavily buying the dip on as of late. And like we saw from the chart, as the share price continues to fall, Ark has only purchased more and more shares and now owns more than 27 million of Palantir. And if we take an average cost around $22 per share, just to give a fair estimate from the highs and the lows, Ark Invest has invested over $500 million into this company. So they are a major stakeholder, they believe in the brand long term, and I do like big data. I don't know if Palantir will be the number one company in the industry forever, but I think big data analytics is a sector that's going to benefit from the trend of digital transformation for long into the future, and they are definitely a player in that growing market. So that was stock number one of the two companies we're going to discuss that Ark Invest has been really buying into as of late and has made the most of the big dips and falling over 45% from its highs. And now if we jump over into the second company we're going to discuss today, it is ticker DKNG, which is DraftKings. The online sports gambling and iCasino company currently trades for $43 per share, and over the past 12 months, they are up by 50%. They have a market cap right around $17.5 billion, and we can see as of late a major drop in share price. And taking a look at the recent performance, back in late March 2021, so only about 2 months ago, they were trading for $72. But from that high point, they have now fallen 40% from that level, back down to what I believe to be a much more reasonable valuation. And again, I completely understand why Ark is buying the dip. The online sports gambling market within North America is only at the starting point. It is nowhere near its fullest potential just yet, and companies like DraftKings have a lot of room to grow over the next few years. And if we take a look at the holdings, as the share price, like we saw, continues to fall, Ark's purple line, indicating the amount of shares owned, has started to accelerate. And recently, over the past month, as the share price took a major drop suddenly, that's when Ark started to buy more and more shares every single day. And in total, they own over 11.1 million shares of DraftKings, and with an average cost, we're going to estimate at $50. Once again, another brand, Ark has spent more than $500 million buying into this company. And if we jump over to their investor presentation, over the longer term, once the entire US market is exposed and legalized online sports gambling, they believe the industry is going to be worth at least $22 billion. That's massive from where they sit today. And if we take a look at the current numbers, only 27% of the US population has access to legal online sports books, and only 11% has access to legal iCasino games, which are the roulette and the different slots. So currently, only a fraction of the overall population has access to DraftKings services. But as more and more states continue to legalize these activities, the numbers expand, and currently, only a handful of states, I'm going to guess less than 20 out of the 50, have legalized processes in place. So currently, the market for DraftKings is very small, and the company is still performing very well. And if we take a look at the numbers, they are the only operator in 12 full states, and all their competitors are in less, and there's only 3 different brands operational in 10 states at this current point in time. And right now, in the current online sports gambling market, DraftKings owns a 30% market share. So they're one of the leaders in the industry and basically control a third of the overall market. And in the iGaming market, they own around 20%, so another main player in a fast-growing industry. So overall, DraftKings' entire market has a lot of room to grow and expand over the long term. And that's what Ark likes to do. Like we discussed at the very beginning of the video, they're focused on disruptive innovation and the companies who are going to change the world. Not the companies who dominate today, but the brands who are working towards building a business that's going to change the way people live, what they do for fun, how they get entertainment, how they conduct their work, all the companies that are going to change the way we live our lives. That's what Ark likes to focus on. And we can see that with DraftKings. They're making the most efficient, user-friendly, and most brand loyalty app in the online gambling space. So of course, the days of always having to make a bet at a casino for different sports games or different casino and iGaming platforms is going to be changed forever, and DraftKings is leading that movement. And if we take a look at the income statement, year over year, their total sales have been expanding at a terrific rate. From $226 million back in 2018, only 3 years later, they've generated over $838 million in total revenue in the trailing 12 months. The company's not profitable just yet. They are burning through a ton of cash, but hopefully over the next 2 to 3 years, they can achieve profitability and continue to expand nicely for many years to come. So that was the second company that Ark has been buying into as of late. DraftKings has done very well over the recent quarters, and now as more states legalize this online sports betting, I think the numbers are going to grow exponentially. As more of the population has access to their services, I think it's only going to create a long-term exponential graph in revenue, and DraftKings and also Ark Invest, who owns $500 million of the stock, may see great rewards over the longer term. So that was the second company that Ark Invest has been buying into as of late. With the overall market dropping, they have made the most of these opportunities and bought the dip onto high growth companies with a lot of future growth potential. So now we're going to kind of wrap up the video. I want to thank you for watching to the end. Of course, we took a look at Palantir and DraftKings, 2 names Ark Invest has been buying as of late, and many investors love to follow Cathy Wood, love to see what she's doing, and as one of the greatest asset managers in the industry right now, she's always making new headlines with different price targets, innovations, and overall purchases that shock the market. So I'm going to thank you once again for watching this video to the end. Please hit that like button, subscribe to the channel, leave me a comment down below on what you think of Palantir and DraftKings, and I will see you in tomorrow's video.